In this class, we are going to discuss what is wedge, a wedge chart pattern. Now, if we mean a wedge is one of the powerful reversal tools that you as a trader can use to reverse a trend. It's good. It's a chart pattern which is majorly used for the reversal of trend, right? It's so nice for reversal in a downtrend to an uptrend market, or reversal from an uptrend market to a downtrend market. Now, before we talk about these chart patterns, wedges, I would like to draw some images of wedge so that you can have an idea of what we will discuss in today's class. Right now, how does a wedge pattern looks like? Now we have a pattern like this. We make this color, this to be thick, and we have another pattern like this under. Now, in summary, we have a sloping two trend line coming together at an apex. Now we can have it like this, or we have it the opposite side like this, whereby we have the trend line at the bottom like this. Now, as you can see right here, this is an example of what we called wedges. Now, the one right here, which I would tag as number 1 right here, is what we call a wedge that reverses a downtrend to an uptrend. And the one right here is number 2, which I call the wedges that reverse an uptrend to a downtrend. They all belong to the variation or family of triangles patterns. But the difference right there is this pattern is sloping downward or either sloping upward. Now, this number 1 reverses a downtrend to an uptrend, and the number 2 right here reverses an uptrend to a downtrend. Now, which means some will call this pattern right here a bullish wedge pattern, which means it reverses a downtrend and uptrend. While some will call it a bearish wedge, it's sloping downward. Whichever of the name you want to call it, just know whenever you see this pattern sloping downward, it means the end of a downtrend is about to come to an end. And the number 2 right here is, some would call it a bullish wedge because it's pointing upward in direction of the momentum, while some will tell you, oh, it's a bearish wedge because it means price is about to fall down. But whichever way you want to call it, it does not really matter. What does matter is you know the technical implication whenever you see this pattern on your chart, which means as price keeps on progressing upward, there is a higher probability price might break all the way to the downside. There's not any guarantee right there. So this is why some traders wouldn't want to call it a bearish or a bullish flag, or bullish narrow wedge, bearish narrow wedge. They prefer to call it a wedge, or a falling wedge, a rising wedge. So I would prefer to call it a falling wedge and a rising wedge. So when you see this pattern pointing its nose downward, then you say it's a falling wedge. When you see this pattern pointing its nose upward, then you say it's a rising wedge. So a rising wedge has a bearish implication, whereas a bearish, that is a falling wedge, has a bullish implication. Now let's wipe this out and let's go draw more images of wedges. So narrow wedges, how can they form on the price chart? The first one we are going to discuss is what we call the falling wedge. Now, I'm going to make a construction of the falling wedge in a bigger format so that you can get to know it very well. So we have a pattern like this, and we have another trend line underneath it like this. Now, whenever you see this type of pattern, then it's a falling wedge. A falling wedge, it's a wedge, a falling wedge. Now, how can this pattern act in the market? Now, before we can say, okay, this pattern is a falling wedge or a wedge that has a bullish implication, what you need to understand is before price can prove that this is a wedge, we first need to see a rally up, which means price has to move from a low section. Let me put this to be more bold so that we can see the thickness. That means price has to rally from a low section on the price chart. Now price travels like this, make a pushback, then goes up, make a pushback, then goes up, makes a pushback, goes up. Then you see price keeps on depreciating. You can see that You can see that. You can see this. And then price does what? Breaks out. Then it means there's a higher tendency for price to continue rally to the upside. So whenever you see this pattern, it does shows you that, okay, market is about to continue bullish upward rally. Now, this is the first drawing of bullish rally having a stop and then continue to the upside. So in summary, you might have been wondering that, oh, I said this chart pattern can be used for the reversal of a bearish trend to an uptrend, but you would see that we have a bullish move from the left hand side all the way up. Then we had a bearish pushback and then continuation. Now the questions you might have wanted to ask is, can this pattern also be used for continuation of the market? Yes, it can be used for the continuation of the market. Yes, it can be used for the continuation of the market. But in generally, this pattern is so good for reversal of a downtrend to an uptrend, but it can also be used for the reversal of or for the continuation of an uptrend. Now, let me show you how we can use this pattern for the reversal of a downtrend into an uptrend. Now, I'm going to remove these drawings right here and then show you how we can use this for the reversal of a downtrend to an uptrend market structure. Now, when you have this pattern like this, now it means price is coming from an uptrend market structure like this, and then we have price making more bearish swing all the way down. Then suddenly we see this pattern building up. Then we see that, okay, price kept on bouncing through a medium like this, and then suddenly the price breaks out to the upside and then it continue going up. You can see that. You can see this pattern can as well be used for the reversal of a downtrend to an uptrend market structure, right? Now, it means as a narrow wedge, if you call it a bilateral chart pattern, you are right. You know, as a bilateral chart pattern, it means a pattern that can act for two possible trade opportunities in the market, for continuation or for reversal, right? So it can be used in two ways rather. I think that's the best thing we have to say. It can be used for continuation and reversal of a market trend. Now, this is the two ways in which you can use a falling wedge. Now, the pattern we have right here, we can tag it now as a falling wedge. That is a falling wedge, wedge. So whenever you see this on your price chart, it is what we call the falling wedge. So we have it right here as a falling wedge. So a falling wedge can be used for the reversal of a downtrend to an uptrend market structure. And then if we are going to have this pattern for the reversal of a downtrend, we need to see price breaking out. You can see right here, price has to break out with a massive volume, which I will still show you on the price chart. Now, once we understand how falling wedge can be used for the reversal of a downtrend and uptrend, let us make a revision of how this pattern can as well be used for the continuation of an uptrend market structure. Just what I drew earlier, I told you how this pattern can be used for the continuation of an uptrend market structure. I said in an uptrend market structure whereby we have price moving up like this, moving up, you can see that. Then price come to a little stop, and then we have price going all the way down, and then later price breaks out and they continue to move up again. You can see that. So it means this wedge, it's a very important, it's an important chart pattern you need to understand as a trader if you'd like to spot out reversal or continuation trading patterns in the market. Now, this is the falling wedge. Now, before we go into the rising wedge, first let's find out series of examples of falling wedge on our price chart. Now, we clean out this and then we look out for markets. Since we can see the falling wedge in a downtrend and in an uptrend, that means if we see it in a downtrend, it might hype for the reversal of such downtrend to an uptrend market structure. Is that right? Now, what you want to look out for is you want to look out for a downtrend market structure whereby you can see this pattern. Okay. All right. This is chart of gold. Let's see if we can study what we have right here. we have a slope. We have a slope here, fire it to this high all the way down. No, we can't really call this pattern. Let's zoom out, and if we can't see it on gold, we can go to any other market. So if you can't see it right here, we go to other market. Now let's go to Forex market. We zoom out on your price chart, and then we look out for this pattern. No, this pattern don't occur frequently on the price chart. This is why, whenever you see it on the price chart, you have to pay attention, because it has a lot of meanings on your price chart. It doesn't just form like a regular chart patterns you can find always on the price chart. So that means we need to exercise patience before this pattern will come out in the market. So we are still looking out for this pattern. All right, let's see. We have an example right here. No, we can't see that, and we don't have these patterns in this market. We can switch to other currency pairs like the euro paired against USD. Now we have to clear out all the trends we have right here and see if we can have series of examples of these patterns in the downtrend or at the middle of an uptrend market structure. All right, so we have more. Okay, let's find out what we have right here. Now let's check this right here and construct our trend line all the way up, then we fired it all the way down. All right, we have another trend at the bottom right here. Have another one right here. Okay, now this is an example, a good example. Now the question I will ask you right now is what do you think happened right there? As you can see, right from these low swings in this market, we have a downtrend market structure right here. You can see we rallied all the way up. We kept on having swings, higher low, swings, higher high, higher low. You can see that higher high, higher low. Then we rallied into this medium. We've formed our falling wedge, and later price broke out and the market continued all the way up. Now you can see this is an example of what I called the falling wedge, which can help us to continue an existing bullish trend. Now you can see from the left hand side right here, we were in a bullish rally. Then at this medium, we had a little pause before price rallied all the way down. After price rallied all the way down, we broke out this pattern. We continued our bullish rally. So this is a good example of using falling wedge for the continuation of a bullish trend. Right now, let's move all the way again and look for more examples on this price chart. Maybe we can see more examples right here. Let's look for more examples. We've seen the situation whereby we use it for the reversal of an uptrend. Let's see if we can use it. Continuation of an uptrend. Now let's see if we can find another example for reversal of a downtrend. We have one here. You can see how I keep on having this. So to get this pattern, you have to understand that you have to zoom out on your price chart. Okay, we have another one here. Yeah, this one right here. You can see this is a falling wedge. You can see how we broke out again. You see continuation of an uptrend market structure. Now we are looking out for reversal of a trend, reversal of a trend, reversal of a trend, reversal. Okay, let's go for another currency pairs and see. We've seen continuation. We've seen continuation. Now we want to look out. We want to look out for reversal of a downtrend. Okay, here is a reversal of a downtrend right here, all the way up. Fire it all the way down. You can see here we have reversal. You can see that. You can see how it reverses this market. You can see the market was coming all the way down. First, we had a kind of a bullish surge and then equalizing a main low high swings right here. Price pushed all the way down, but price was unable to get to the trough in this market. Now you can see how this narrow wedge helped us to reverse totally this previous downtrend. You can see this downtrend have been coming from this peak. You can see the distance from this level, from this peak right here all the way to this down. eventually the chart pattern that led to the reversal of this downtrend to another bull rally, currently still active in this year 2025, is, now let's check the months. Right from the month of, in fact, this is a long bearish trend. Wow, right from February 2023. Wow, right from February 2023, market has been going all the way down, all the way down, all the way down till the last point here, which was 28th of February. That was almost 2 good years. Now, you can see the power of a falling wedge. A falling wedge put an end to a bearish trend which has existed for 2 good years. A falling wedge put an end to it, and the market reversed into what? Into a bullish rally. And the bullish rally, the bullish trend, is still active till now, to the end of year 2025, because this is December and today is 11th of December 2025. You can see the how strong this pattern is. You can see the technical implication of this chart pattern. So I'm very happy for these examples we were able to find right here, which put an end to 2 good years bearish trend. So that is how we can use our falling wedge. Now that we've learned how to use a falling wedge, how to spot it out, we have to zoom out. Now, for you to use the falling wedge depends on the type of trader you are. Are you a swing? Are you a position? Are you a day? Are you a scalper? Now, if you are a swing trader, if you want to use the falling wedge for reversal of a bearish trend or for continuation of a bullish trend, then you have to go to the 4-hour chart and zoom out totally on your price chart. You have to zoom out totally on your price chart so that you can see all the price movement in one single phase or in a lesser phase, so that you'll be able to construct your chart pattern. So as a swing trader, you draw your chart pattern from the 4-hour chart, you zoom out totally, and for the day trader, you use the 1-hour chart, you zoom out totally, and for the scalper, you zoom out your 15-minute chart totally so that you can see the chart patterns. All right, now that is what we have right here. Now let's move on to what we call the rising wedge. Now for the rising wedge, we have a pattern sloping upward, and we have the underneath trend line sloping right as well. You can see that. So it means price has to travel into this pattern in 2 ways, either from the downtrend market push, whereby we have something like this. You can see how the price kept on going to this pattern. We can see how price kept on going to this pattern. Then suddenly price breaks all the way down and then it reverses all the way down. All right, sometimes price may have to retest this level to prove that yes, it's valid, and then price start coming all the way down. So when you have this pattern right here, it's showing you, look, trader, an end is about to come to this bullish trend, and the market is about to reverse to a downtrend market structure. So this is what I call the rising wedge. So we have a rising wedge right here, rising wedge, rising wedge. You can see that. So that is our rising wedge. Our rising wedge, this is a pattern right here. Now, rising wedge can be used in 2 ways, for continuation or for reversal. But majorly when they are used for reversal, when the reversal is confirmed, it does lead to a very long push in the market. Right now, we can as well use this for the continuation of a downtrend market structure. Now let's wipe this out, and let's start from a downtrend market structure. Let's put this down a little bit, and in a downtrend, what we are going to see is price will keep on making a series of lower lows, lower high, lower lows, lower high, and the price comes into this pattern, then give us a kind of short bullish move, whereby some will think, oh, the market is about to reverse, but suddenly the market will break all the way down and then continue the movement downward. So in this scenario right here, the narrow or the rising wedge or the rising narrow wedge, which one you want to call it, the falling wedge or the bullish wedge, but I prefer you call it rising or falling, right? You call this a rising. So a rising wedge in a downtrend means there's a higher probability for the market to keep on to continue in the downtrend when it breaks out of the pattern. Now you can see that. So this how this pattern operates. Now let's look out how we can spot or how this pattern can be constructed on real price examples, right, or price chart examples. Now we move on and we zoom out already. We are looking out for a rising wedge, right? Okay, as a scalper, this is a 15-minute chart. As a scalper, let's see if we can find out something. A rising. Can we get a rising? We are looking out for something sloping upward. Yes. Okay, let's go to the 1 hour chart on this currency pairs and they'll look out for a rising wedge. Let's look out for a rising wedge. Let's look out for a rising wedge. Okay, no, we don't have anyone here. Let's go for another 4 hour chart and look out for another example of a rising wedge. All right, and rising wedge. Do we have an examples? Okay, I think we have one right here. Now we have a good example right here. We connect it all the way down and we fire it all the way up, and we have one here. No, I won't treat this as a wedge. It's kind of too wide. So we won't treat it right here. We look for another examples right here. Okay, let's keep on moving and let's go to another currency pairs. AUD. Let's look out for this. Is how you keep on looking for this chart pattern, because I told you they don't occur often in the market, but whenever they occur, it means take note of this pattern. Something interesting is about to happen. Now let's look at all this pattern we have right here. We have it all the way down and we have this here. We have this pattern from this peak all the way. Actually, some would treat this as a narrow wedge. Well, if I'm going to examine this right here, we have 1, 2, 3. Well, this is acceptable since we have like 3 touches at the top. Swing 1, swing 2, but I'm going to take this swing as a 1 swing. So if you call this a narrow, a rising wedge, it's okay, it's nice, but I prefer we have something like 3 touches. Okay, let's look out for this one right here. We have these touches here. No, we don't have it. This is how you look at. I am still going to show you how to look out for quality wedge, but this is just an introductory to wedges. We are still going to go through how to determine quality wedges in the market. All right, this is just an example. We have to start from the simplest section before we move on to the more advanced section of the chart pattern. So first thing, we have to know how to draw them. Then later we know how to spot out the fake one from the real one, or the less active ones from the reliable ones. Okay, we are looking out for rising wedge. So this is how you look out for wedges on your price chart. You can see the way I kept on looking out for them. So it's something I can easily make a video whereby I see real fast example, but I want you to see how I exercise patience to find them out in the market, right? It's not as easy as that, because if I should show you the easy view, you're going to think, oh, it's so easy like this just to find it out and I use it. No, it's not that easy. Now let's look out for an example here, and they'll fire it here, and we have, this is not a wedge. You can see how I kept on checking it out, because I don't just want to draw them out and just show them fast and then the video is up within 10-15 minutes. I don't do that. I want you to also see how I filter out my wedges, the criteria I use to mark them, to choose them out, not just by choosing any pattern on the price chart and they say, oh, this is a wedge, this is a wedge, this is a wedge. I want you to also notice how I filter out the weak ones, the fake ones, the ones which are not in line with wedges. For example, right here, if you check this one right here, you say, okay, this is a wedge, then you connect it and then you say, oh, I'll put a trend line all above right here. I think I made a mistake on the pressing doesn't. This is a then you say, okay, I will make this right here. This is not a wedge, this is a channel. This is a channel. All right, you can see that, because majority of new beginners or beginner traders, they just connect two highs to two lows together and say, oh, I've connected this trend line, I've connected this pattern. No, it's not a pattern, it's something else. All right, you can see I'm not just connecting any pattern on the price chart. Now look at a very good example of a falling wedge. You can see this falling wedge right now. You can see how it led to the continuation of this bullish rally all the way up. You can see that. Now that's an example of the types of pattern you should construct. You can see 1, 2, 3 touches bottom, 1, 2, 3, 4, almost 5 touches above. So this is a well-defined or falling wedge. We are still looking out for a rising wedge. So let's zoom out again. Rising wedge. We are going to get them. We just have to exercise patience to get a quality one. Right now, let's look for another example of a falling wedge. They don't come often. That's why you have to be very, very careful when you mark them to know you are not drawing something else. Right. Let's look for them more. Let's look for another currency pairs. All right. You have, okay, let's check out this long move here all the way. Can we tag this as a wedge? No, this is not a wedge, because if by the time you connect these highs here and then you say, oh, this is a wedge, this is not a wedge. This is not a wedge. Now we look out for another examples here. We look out for examples, more examples, and more examples. Right, more examples. Let's go to the forward side and then look for more. If we connect this to this, no, it's not a wedge. You can see how I kept on exercising patience, because I really want you guys to see that level of patience. Because most time when you tell beginners to construct chart patterns, they just look out for any high lows and connect. Boom, that's chart pattern. Boom, that's chart pattern. Chart pattern doesn't come just like normal, regular, no other videos whereby you just watch, you just see this. No, we have to go through together. So once we know how to carefully spot them out, there we can now start identify the weak ones from the fake ones. Right, we have another currency pairs. We go to the euro yen. We have fund one. All right, now let's move all the way to the left hand side and see if we can get a falling wedge. Okay, let's connect these lows here and then track all the way here, and we connect these highs here all the way back. Okay, this is something like a falling wedge, but once again, it's kind of too broad. This is too broad, so I won't accept this. The apex have to be close. You can see how I kept on pointing out the apex. When I say apex, I mean something like this. When I mean apex, I mean something like this, whereby we have something like this. Now look at the distance. The distance here is too wide. Now we must see a situation whereby we don't have a kind of too wide point. We must have at least almost close. If it's like this, it's nice. If it's close, it's like this, better. If it's close like this, better. If you're able to get it connected, that is better, superb. But if you get it like this, it's okay. Like this is okay, but like this is becoming too wide, almost equivalent to a channel. So if you have done channel, you understand that channel is like this. You can see that. So that is it. Now we look out for another examples. Again, another examples. We are looking for a market sloping all the way up. Okay, let's check this out. This right here, if we connect all the lows here all the way up, and we connect these highs like this, can see that, something like this. Yes, this is still a rising wedge. It's almost like a rising wedge, but it fell down, price fell down, and then continue. So right here doesn't act like a reversal, just a small sell, right? So this is telling you not all the time this pattern will definitely reverse the market to a downtrend. It can as well just be for a short pushback before market resume its rally. Now we go to another currency again. We're trying to find if we can get this pattern. Let's look out for another example. Let's look for this one at the top. Okay, let's look for another example right here. You can see the way I kept on filtering out all the patterns I'm seeing. So it's not your regular chart pattern. It is not your regular. I think we found one right here. Let's look out for if we can construct one here from this top all the way back here. We have our top, and then at the bottom we have here all the way. You can see right here, this is a rising wedge. This was a false breakout. Price went in again and then broke all the way down. You can see this is an example of a falling wedge. Rising wedge, sorry. This is an example of a rising wedge. You can see a downtrend, looks like it's going up, and then continuation of the downtrend, and then boom again. You can see all the way down. You can see that. What actually happened right here is a false breakout. If you move to the day chart, you are going to see that this pattern on the day chart will look more respecting the trend line. Let's move to the day chart and see what we have on the day chart. Let's check the day chart. If we can find, okay, I think we can't find that. That is gone. Let's move another currency pair again. Okay, all right, so let's check another example on Swiss yen. On Swiss yen, trading is boring, so there's higher chances you're going to be boring right now. Looking out for this pattern. We have an ascending triangle right here. For those who don't know an ascending triangle, from this low we've done that all the way up, and at the top we connect our trend line here. This is an ascending triangular formation. You can see that. So it makes the trend to continue all the way up. Now I won't spend much time on this. So I'm going to give you guys an assignment for you to go on your chart, go on different time frame, look out for wedges. I think we found one right here. Let's look out for the one we got right here. These are our series of our highs all the way here, and we have our lows all the way here. Yes, this is a falling wedge. I kept saying a falling wedge. This is a rising wedge. You can see from this low here, bullish swing all the way up. You can see the bullish swing came to an end and price broke all the way down. This is a good falling wedge, reversing this uptrend to a downtrend. You can see that. So we have another falling wedge right here. Let me find it out so you can see it from this level all the way. You can see the support all the way down. We're going to find out. This is not a falling wedge, this is like a channel, so we eradicate that. Okay, let's look for another example before we put an end to this chart pattern tutorial course. So we look for another more examples. We zoom in totally on the price chart. I'll look out for another examples. We have one. I think we have one here. We have one here. The best way to look out for this pattern is to zoom out totally on your price chart. Let's look out for this. Let's examine this. Yeah, This looks like a great example. Yes, you can see. I have to zoom out to be able to find it, but this happens at the middle of the trend in the shopping market, so it's kind of not much reliable. So we look out for another example. Okay, we have another example here. From this peak all the way down, and from this low all the way, this like a channel. You can see this like a channel, so it's not a wedge. You can see we don't have any pointing degree. All right, guys, this is where we put an end to that wedge on the price chart. So you go through your chart and connect points together. Now I'm going to give you some. Okay, we have one here. I think we have one here. Do we have 3 touches at the bottom? We have 1 and 2. Remember what I told you about trend line? If you cannot see 3 touches, then it's not a trend line, it's a line. So this is not a wedge. We have only 1, 2. So we can't connect this as a wedge. We need to have like 3 touches under. At the top right here, we have only what? We have, okay, maybe we have 3, 1, 2, 3. You can see that? We have 1, 2, 3, but at the bottom we have only 2. So we can't connect this as a what? As a wedge. We need to see minimum of 3 touches under and up. Now let's check out what we have right here. Maybe it's a wedge. From this low here all the way back, we fire it all the way up. No, this is not a wedge, right? Now you go over your chart and they'll connect wedges. 3 points at the bottom, 3 point minimum at the top. When you do that, you have your wedge. You can see here, good. This is an example of a rising wedge. You can see it. You can see from a downtrend, price goes upward. We have a bigger wedge. Price broke all the way down, and then the bullish market continues. You can see that I was able to connect how many points? We have the first point right here, 1. The second point right here is a line, and the third point right here makes it a trend line. And we have one right here as 0.1. We have one here as 0.2. That is a line. And once we make it 3 point, that is a trend line. So together we say this is a what? A falling wedge. Now that is how you go on your price chart, looking out for 3 point at the top, 3 point minimum of 3 point at the bottom to construct either your falling wedge or your rising wedge. So do you have any question?
No, sir. No question, sir.
Do you understand that question? Do you understand the class rather?
Yes, sir.
Now let's quickly construct this and see if we have a wedge. 3.123. Okay, let's look for the undernet. Maybe we have this one here, 1, 2. We fire it all the way forward. No. Only if we treat this one as a false breakout. So we connect it like this. I fire it all the way forward. So we're having a rising wedge right. You can see price broke out, retest. So now before you trade this right here, because you are fine, you got this pattern on the day chart, so we have to go to the higher time frame to do some analysis. Check the weekly charts, check if there's resistance above for us to sell at that point. Now we have a series of resistance right here, which has been taken out. Okay, we have another one here, which is yet to be taken out. You can see we move right here. This level is still holding on price. Now we move back to the, okay, let's check if this pattern can give us a wedge on the weekly chart. On the weekly chart, we are not going to take this as a wedge because it's not respecting the weekly chart. So what we have right here is not a wedge. This is not a wedge, right? This is just a kind of a choppy market, right? It's a different pattern. So that is it. This is how you move on, checking different patterns. You see them, you relate them to a higher time frame. So in the next class, we dive in more into wedges, how we can spot weak ones from strong ones, the criteria to mark our wedges. So let's reverse again. We have this right here as a rising wedge. This is a rising wedge. So a rising wedge, we need to have 3 touches inside. 1, 1, 1 at the bottom, 1 at the top, 2, 2, 2 at the bottom, 2 at the top, 3, 3, 3 at the bottom, 3 at the top. So once you have this, then you have a wedge. All right. So it now depends where the market is coming from. Maybe the market is now coming from, if the market is coming from the bottom, then it means a continuation to what? It's coming from the bottom. Means if you have something like this, price is likely to break all the way down, push all the way down to reverse the uptrend to a downtrend. That is gone. Now, if the market is coming all the way from the top like this, whereby you have something like this, price flows in, and then you have something like this, then it means the downtrend is about to what? It's about to come all the way to resume to the what? To the uptrend. So that is it. And in the case of a falling wedge, the opposite, we have something like this. We have this like this. We draw it bigger. We have something like this. So if the market is coming all the way from the bottom, we have 1 1 1 1 2 2 2 2 2 3 3 3 3 3 at the top, 3 at the bottom. So market can go up, continue it, and if you have it coming all the way down like this, 1 1 1, something like this, it goes up. So you get that. And let's repeat it again. If it doesn't slant all the way down, if it slants up, then we have something like this. Market either goes like this into it. Sometimes it can break up. We still talk about that. When pattern fails, what should you expect? But when you have something like this, expect something like this. Now, if you don't have it that way, if you have it this way like this is just a revision of what we've done so far. You have it like this, then if the market is coming from the top like this, you can see that. So in this case, momentum is shifting upward, whereby in this case, momentum is shifting downward, right? So study that. Another revision, if you have it like this, that means momentum is shifting upward. Suddenly we have something like this. Continuation. You see that? So this is just a revision. And then if you have it again this way, so in this case, momentum is shifting all the way down. So that is it. So I will see you in the next one. So do we have questions?
No, sir.
All right. Thank you. I'll see you in the next one. Peace.
All right, sir. Thank you so much, sir.
You are welcome.
Yes, sir.